Well, last Friday I said TGIF, thank God it's Friday. Today I think I'll have to say why it's Friday. Because global markets have come back, risk seems to be reversing, crude is down, and dollar index is also favorable. Let's look at the construct there, please, once again. And I'm going to go to Sandip Sabharwal for his views. That's the Nifty for you this year. But what is important for me is that 4.6, 4.9 or 5 on 10 year has become 4.6. 96 on Brent has become 86. 96 has become 86. $10 गिर गया है. Brent is also, 10 year is also down from 5 to 4.6. So 5 seems to be the top end at which at which the 10 year paper seems to be retreating. And the dollar index has also started marching lower. 107 has become 106. Now let's look at Nifty. In the series, which is from last Thursday to this year, I'm talking about this series. Nifty is today likely to open ahead above its series high, which means that there could be an element of short covering. FI positioning in the F&O market is already very short. So just when everybody thought, okay, it's going to be geopolitical concerns, FI selling, no earnings trigger, are we in for that last hurrah in the market? And Sandip Sabharwal, good morning. Thank you for joining us. The global markets are favorable now. So are we in for that hurrah now? It may start now, which starts with Happy Diwali and then it goes to become a Merry Christmas.
Yeah, it's possible and very much likely because global positioning on equities as well as risk assets is now at extreme pessimism. So all of us tend to look at the Indian markets without correlating to other overseas markets. So actually, if we see in the global market, there has been significant corrections both in the US, European, as well as other emerging markets. So India held up, and there are several reasons for that. One is strong domestic flow. Secondly, the macros in India are much better than most of the economies, etc. And to that extent, our rallies might also be less sharper, but then that's fine because very sharp rallies in any case I don't like because things tend to move up very fast. So 2024 overall I think will be good for equities.
One read into this reversal which has happened in the 10-year paper, crude, global volatility. I mean, the decks have suddenly, or the table suddenly has changed. Setting on the table has reversed in 1 week. Sandeep?
Yeah, it was imminent because on crude also, on crude, people track crude prices. I think the key things to track are refining margins. So the way refining margins were collapsing, it was very apparent that final product demand was very low and crude holding up at these levels was not possible. And this is despite the tensions in Middle East not actually reducing. Over the next few weeks, it's very much possible that those tensions will actually come down as the fighting ebbs in Israel, Gaza. And the demand scenario for food, like oil products is pretty weak at this stage. So on a macro front, that's a positive. But see, from the Indian perspective, crude is not the same thing which it used to be 15 years back, that only crude determines our trade deficit or the inflation trajectory, etc. Overall, Indian inflation trajectory is much better place. And even if you look at the 10-year bond movements, it's very important. 2 years back, US 10-year was at 1.6%. Indian 10-year was 6.5%. Now, US 10-year is more near 5%. Indian 10-year is more near 7.4%. So our rise in interest rates also has been much more shallower, allowing the economy to adapt and the growth to sustain at higher levels.
Sandeep, what's your view on hospitals as the sector? I know you believe that Apollo Hospital sector was, expensive. Today, Morgan Stanley has initiated coverage with quite a bit of upside on that one. Any change in your view?
No, my view on hospitals was that it's a good long-term structural story, but we cannot be buying the stocks at all prices. Near term, some of the hospital results also which have come up show some stress on margins, etc. So we need to watch out for let the results, etc. come out, then we can evaluate. Structurally, it's a good story, but we have to buy at the right prices because we can't be buying at any price and at any valuation.
Hospitals and hospitality, two different sectors. But in terms of the price trend, hospital stocks have done well and hospitality stocks have also done rather well. And both the sectors got completely decimated post-COVID. Hospitality for obvious reasons, hospital for obvious reasons. I'm not getting there. But from the COVID lows, whether it is hospital or hospitality, rhyming. संदीप सभरवाल राइमिंग है तो हॉस्पिटल एंड हॉस्पिटैलिटी दोनों ऊपर है.
Yeah, both have done well and due to different reasons, and both took a beating during that time. And I believe today, as we look at it, hospitality overall as a sector has, I would think, is much more attractive than the hospital segment, given the fact that the trends are very positive. You yourself have been interviewing the Indian hotels CEO every quarter. I think what they've done with the company is phenomenal, and the kind of profits, cash flows they're generating, how their new brands are doing, how the asset light model is working. I believe that it is one stock which has now become sort of should be a core sort of holding in people who believe in the India story as well as believe in investing in mid-tier companies.
Okay. Tata Motors, and I'm going to spend some time with Sandip, Nuresh and Vishali to discuss Tata Motors. Sandip, at the beginning of the year, your view was this could be the year for Tata Motors and the operating leverage benefits would kick in. Then they did a DVR buyback. Now they're taking a subsidiary public. But at 636, whatever good work they've done, do you think is it priced to perfection?
Nikunj, I don't think so, simply because of the fact that the improvements have been much more drastic than what people expected. It's like what happened on we were discussing hotels right now. It's like what happened there, where in one quarter, some Indian hotels, I think last year, delivered profits which analysts were expecting for the full year. And that's what operating leverage means. When things turn around, then the improvement in performance tends to be much better than what most analysts expect. I think the revision of EBIT guidance for JLR from 6 to 8% is very significant, and it indicates that the cash flow generation could be much more stronger. And if you look at it on a price earning ratio, the stock is still near mid-teens PE ratio. It's not that it's gone up and it's trading at 25, 30, 40 times PE ratio. So I would think that stock still has the ability to do well.
Stock which we were discussing, and I think Sandeep owns it. I'm surprised L&T is trading so cheap. Just think about it. I mean, they're doing a buyback. Capital allocation has improved. They've incubated on the same balance sheet the IT business. Their guidance is decent. ROAs have improved. 15-16% is the ROA now, right? And it is still trading at what, 24-25 times 1 year forward. So if you frankly ask me that, sometimes market gives you these obvious plays. It's just that we tend to always ignore them. We get blindfolded with a lot of new ideas without realizing that the best idea is actually right in front of you. कहते हैं ना हिंदी में चिराग तले अंधेरा.
Yeah, exactly. And in fact, Nikunj, look at how GCC, we were discussing this in the morning, hydrocarbons have completely turned around for them. Almost 1/3 is coming from.
Yeah, and they're investing a lot in terms of like all infrastructure, not just hydrocarbons, right? From, making those stations to stadiums, everything is coming up, and L&T could be a big player. I know, Sandeep, you have been fairly positive on that stock, but let's see, what are the levels you're watching out for? What could be that stock price, let's say, a year from now on?
See, stock price prediction is very difficult, but I think the trends are positive. So in many stocks and sectors, you have to follow the trend, and as long as the valuations are not above your comfort level. So I would, valuations of L&T are not above my comfort level because their delivery in terms of what they actually started to deliver in terms of top line, the possibility of improving margin profile as the older order book gets over, because typically it's a 36-40 month order book cycle. So I think that margins could improve next year. And the kind of orders they are getting from, and the larger size orders are so significant that it's very positive. Now, the reason many investors remain skeptical on such companies is because of lower return ratios as compared to some of the consumer companies, etc. But I think there also it will improve as they have become very wary of capex and not going into BOT projects, etc. So stocks done well in the recent past, and I would think that there's no reason why it won't do well over the next year. What returns it could give is difficult to say. I would think that whichever large cap stock offers 15% plus kind of return potential, I think that's something to look at.
Shali, what's the charts telling you right now? Around 32, 3300 it went and then scaled back to 2800. Is there a trade to get in now in L&T?
Who are you asking? Me or
Vaishali.
Yes. So I would say Larsen is holding on very well in a worse scenario. I mean, we are seeing that market is showing signs of bottoming out, but yet I would say accumulate, because even in a worse scenario, I don't see the stock going below 2,700. And I think even right now it is at a make or break levels. So my view would be to accumulate, keeping in mind 2,700 acts as a prominent support, and projected target definitely comes to 32 to 3,300 as a positional buy.
Okay, so that's the take coming in from Vaishali on L&T. But the other heavyweight, Naresh, Reliance and HDFC Bank, anything on the charts that are telling you that a breakout is imminent?
So these are the two charts which are actually becoming a problem in terms of the index movement. So if we look at Reliance Industries, the stock is at 2,300. That is where it was for the last 2 years, almost 2021, where it topped out, even adjusting for Jio. So out here, in the near term, it has been making lower tops and lower bottoms. But we've started seeing a recovery in the last 4-5 sessions from 20 to 80, roughly to 2320 levels. The recent swing high is 2370. If it can cross, that would be the first indication of a trend change. So I would be watching it out if it can change above those 2370 mark. HDFC Bank, similarly, a similar swing high is much higher at 1550. The stock continues to struggle, and this ends up, both these names end up becoming almost 24% of the index. And that creates a no trend in the index as well. So for now, watching out whenever we see a price action beyond 2370 or 1540, 1550. That's the time would call a reversal, not as of now.
You know, I'm in this Friday mood, so Sandeep and Naresh, please pardon me. I used to always make an effort to make Sandeep smile on television, but you've convinced for Sandeep to make, sometimes he smiles, now he's smiling. But Naresh, I've failed to make you smile on TV. What can I say to make you smile? India जीत गया, Lanka हार गया, Nifty ऊपर है. Naresh, smile.
I think a stand-up comedy joke.
No, I don't know ones actually, so I'm telling you. Let's smile. It's a Friday. India is... Did you see the match, by the way, yesterday?
Yes, it was fun.
You know, me and Anisha had gone there and we both, not planned, coincidence. Not planned coincidence. And we booked a dinner table for 9:30. The match got over at 8 o'clock. We reached the restaurant. They said, we are booking to 9:30 baje. Right, Anisha?
Oh, well, yes, it was too much fun. It looked like we were pretty much watching the highlights as well. But, you know, the vibe, you know, it's just a completely different feel. It was a long time after which I went for a match. But I think now, hopefully, we are there in the semi-finals. We hopefully have that first, level. And then the match is in Mumbai. So, let's see if we can do that. And then, hopefully, we'll get you also, Ajay, there.
What great form, Indian team is.
See, I'll tell you what I've realized. I mean, the chorus there was Mohammad Shami. And Mohammad Shami has just been this real on this comeback trail. But guess what, guys? He's 35 plus. So, Naresh, the best of yours is yet to come, Naresh. Don't feel bad. I know you're aging, but don't worry. Shami's come back at 35. So, best of Naresh and Virani is yet to come. Sandip Sabharwal knows that best is yet to come. Right, Sandeep? Age is never a barrier for you.
No, in the investing business, you count the reverse actually. So it's not like the player's life cycle. It's the investing life cycle is actually the reverse. So best for many people are yet to come.
So I'm so glad everybody is enjoying the Friday spirit. And Naresh, thank you, my friend. I've finally managed to make you smile today. We shall remember this day.
All right. Thanks for your time today, Sandeep.